So after the financial recording and then the corporate finance participants, we have the next topic over here. The next topic is the cost of capital, which comes under the corporate finance over here. So capital means it is the amount that we are trying to make the investment in the organization, and then in which project we have to invest, how much we have to invest, whether it's going to give us a proper return or not. Okay, that we have already learned. Now we will see what is this cost of capital. So capital in the sense, participants, it is the initial investment that we are making into the business. Okay, what is the meaning of capital? Capital means it is an initial investment. Now whenever we are investing the amount, it will have certain cost. Okay, because the same amount you might have brought it as a loan or a debt into your company, or you must have taken it from the investors who will be expecting certain kind of share in the profit after you make it, or whatever amount they have invested, they want certain share on that. All right, let's say after end of 1 year, 3 years, they want certain amount as a payback for them. So you have to make sure that whenever you are investing this kind of money into the business, you should be able to make up with a considerable amount of profit which you can share among the people who have made the investment in the organization. Now, for example, let's say it's a public company, and then each and every person or the people have purchased the shares worth, let's say $100. Each share is worth $100, and then they have invested in the organization. Now, when they are investing about $100 in the organization, they will expect, like, let's say some 10% of the profit has to be shared with them, or let's say some 1% of the profit, 0.1% of the profit. So basically there is some amount that is to be shared with these people. All right, so 10% on 100 means they should get $10 on every $100 that they are going to invest. Okay, so they are expecting certain profit here. Now when the organizations are taking all these money and then investing in their business, they should work hard and they should make sure that there is some amount of profit which is being shared with these people. If it is not, and if they are not able to generate the profit, then they cannot expect the future money as an investment. See, because nobody would like to invest in the organization that are running in the loss. Nobody would like to invest there, right? Because investing the money in the loss organization, it means that they are losing the money. So basically they try to generate more and more revenues, more and more profit, so that it can be shared. Okay, so let me repeat this part, participant. Sorry, I think you had lost a little bit of audio. Okay, let me repeat. So what I was saying was, whenever people are investing the amount in the business, they want some returns out of it. For example, let's say it is a public company, and then a person is investing about $100 into the company, and he will expect 10% on that. Means $10 for every $100 he would be expecting, right? Now, in case if the company is not able to meet that kind of needs, or they are not able to make the profit, they are not able to generate the revenue out of the investment, in the future, they will not get any investment. So this is basically a pressure on the business organization, that whenever they are taking the investment from the outsiders, or even if they are making their own investment, there should be some kind of profit or the revenue that could be generated. So in the balance sheet, I think you must have noticed we are going to write about the debt. Debt means it is a amount that is taken as a loan, and then the preferred stock, and then we also have the equity. So all these come under the capital. Capital means it is the initial investment that is made into the organization to generate the revenue. Now there is a cost of a debt. So whenever a person is taking a loan, now when you take a loan, let's say you purchase, you take a home loans or you take car loans. So when you're taking loans, participants, apart from paying that principal amount, let's say you have taken about $10,000 as loan. Okay, no doubt you have to pay back that $10,000 to the bank, but with that you'll have to also pay the interest. There will be a plan basically. Okay, let's say you have purchased, you have taken the loan for 5 years. 5 years, and then you are supposed to pay back $10,000. So every month you're going to pay the interest. So there will be interest amount that you're going to pay, correct? So that is basically a cost of debt. You have taken a debt. Debt means it is a loan. If you have taken a debt, you're supposed to pay the interest for that. Or the very popular terminology that we use is EMI. You pay the EMI. So it is not just the principal amount that you're paying, but along with that you should also pay certain percentage of the interest. So here also, participants, whenever the organizations are generating the capital by taking a debt, they are supposed to even pay the interest on it. Okay. So let's try to understand here what is the cost of that debt. And that debt is to be paid once the expenses of the manufacturing, or let's say the investment, are met. After that we pay the interest rate, and then lastly we pay the tax. So there is an example here, participants. Let's say there is an organization, okay, who is planning to issue a new debt to an interest rate of 10%, and the ABC has about 38% of the federal plus state tax. Okay, 38% they have to pay as a tax, and then 10% of the interest rate. So what is the after tax cost of the debt? Okay, after paying the tax, what is the cost of the debt? So here you can see, participants, KD means it is a cost of debt. 1 minus CT means it is a tax, alright, and then that is equal to 10% will be what? The interest rate, and you are multiplying with 1 minus 0.38, because here this is a 38 is a tax that we are going to pay. So the cost of the debt will be 6.2. Okay. Then we have the cost of the preferred. Preferred means, again, this is also a type of capital that we are trying to raise. So for example, do you see there is an organization that has issued a stock that pays $5 in dividends per share. Okay, so that's what I said. Whenever you are purchasing a share, right? So on that share, it will be having some amount, okay, that you have to pay. Now let's say the cost of one share is $100. You pay $100 and you take one share of the company. Okay, so in that case, you'll get $5 as a dividend as per this example. So per share, the person should be getting $5 in the dividends. Okay, and then the preferred stock was sold for $50 per share. What was the Laurel's cost of preferred stock? So here, do you see KPS is 10%. KPS means it is a cost of preferred. Now we have the cost of equity. Cost of equity means it is the initial investment that we make to the organization. Okay, so here again there are certain equations, participants. You need not get into too much of detail. Just be aware that even in the real time you will be coming across this kind of terminologies, and then the equations that you'll have to gather as a BA, and then you will have to give all this information to your developers and then the QA, so that the software could be developed and then tested. Now the next most important topic, participants, the business and then the industry cycle. So let's see what is this business and the industry cycle. Participants, this finance is little bit difficult topic. Okay, if you're not from the finance background, it will have little bit of difficulty for you to understand. But anyways, try to understand, and then you can go through these materials again and again to understand better. Okay, so now we have the business cycle. Now every business will have a cycle. Now for example, you can consider, I'll give you a general example. Okay, there is a human life cycle. All right. Basically the human life cycle, it starts with a birth of the person. All right, and then you will be a kid for some years, and then you come to your adulthood, and then slowly you start getting older, and finally there is a death. Okay, so that is called as a life cycle, correct? That is a human life cycle. So initially, when you are in your birth stage, or let's say when you are in a kid stage, parents are simply investing on you. When you come to the adulthood, then you start again earning, and when you come to the old age, again your earning stops, and then finally the person dies. So do you see there is some kind of financial growth, or let's say there is some kind of cycle that you could see here. Similarly, in any kind of business organization, you can see certain kind of cycle, means the certain stages of the business that you could observe in the organization. So you see here, first of all, we have the recovery, early expansion, late expansion, peak, and then we have the recession and then the contraction. So participants, we have the business cycles over here. All right. Now let's say this is the time, and then this is a sales, or let's say the income, you can say. This is basically the income, or you can say profit, whatever, basically the returns. And here you consider this as a timeline. So we start with the recovery here. Economy shows the early signs that the recession is ending. So initially what happens, participants, there is only investment. Okay, when there is investment happening here, the returns are zero, the revenue is almost zero. Okay, because whatever you're getting, it is just the recovery amount that you have. All right, so the revenue is almost, I mean, there is a revenue, but then profit is zero. You're not getting anything out of the business. Whenever you initially start the business, day one onwards, you cannot expect the profit, because you have invested on the land, you have invested on the building, you have invested on the equipments, you have invested on your computers. All right, you have invested on the employees. So much of investment goes initially that you are not taking any profit home. Okay, so that is a early stage. And then starts the recovery stage. So slowly the recovery starts. You start making the sales. After the manufacturing is done, you start making the sales, and then slowly the amount that you are getting, it is trying to make up for the investment that you have done, and slowly the amount start raising. So there is a early expansion. So initially there is a recovery that is happening over here, and then the recovery is going on increasing, and then there is a late expansion here, wherein recovery has continued confidence, and then the momentum are high, means the business has started growing. Whatever initial investment we have made, everything we have recovered now. So whatever we are getting, it is totally towards the operating cost, and then the operating cost, and then the profit. Then it reaches at the peak, and after that it slowly drops, and then again the recession happens over here. So recession means what? Basically you're investing much and then you're getting less, so that is basically called as a in recession or the contraction. So at certain point of time, your profit slowly starts coming down. Okay, so this is directly related to the product life cycle, which I will show you next. In any business it is like that. Okay, initially you're making lot of investment, you're not expecting any kind of profit or take home, right? And then slowly, when the revenues are getting higher and higher and higher, whatever investment you have already made, you start getting the recovery on that, and then your business will reach to the peak. But then a certain business cannot go beyond that. Now let's say you are setting up some store. Okay, the first day itself you don't get all the customers. The number of customers are going to increase every day. Day by day the number of customers are going to increase. Okay, and then at one point of time you'll have the maximum number of customers. Fine, you'll have maximum number of customers, and then your business will be at peak. And then slowly, participants, that revenue, or let's say that profit, gets stabilized, because in a particular area you have set up the store, there is some kind of population over there who have become already your customers. You cannot expect anything beyond that. Okay, because the number of customers in that area is fixed. Now people are not going to come from any additional places just to purchase at your store, right? There is a particular location wherein you have set up the store. Now you have already got all the customers, so it has already reached the saturation point now. And then there is a regular business that will be going on, and then slowly there are competitors that are coming into your business. So they see that, okay, you have set up one shop, there is only one shop in your area which is running very good, there are other people who will try to enter into your business. All right, so there is another store that is opening. Slowly your business starts coming down, again another store is entering into your business, again slowly your sales are coming down. So that is basically a business life cycle that happens. So usually when we come at the peak and the recession starts, we have to try to do something new. Okay, maybe you try to expand your store, you try to construct another house, you try to introduce more products into the store. So you should try for some kind of capital investment, we can say that is actually the capital budgeting. In every organization it happens whenever the business is reaching the peak, and then the recession is slowly happening, then the people start making again the investment of the capital. Maybe they are doing some expansion, maybe they are setting up the branches in the other locations, all right, or they are trying to meet the technology needs of the um, needs of the society. So they start trying to do more and more investment again, so that again we can start up and then we can come back to the peak of the business. So that happens in every business. In the business you have heard, right, there will be ups and downs. Yes, this is what we are talking about. So at certain point there is a zero, and then slowly we reach to the peak, again there is a contraction that happens. And when we are at the contraction time, this is a sign that we have to do something new, we have to make new investment, we have to take new steps or new decisions in our business. So this is a business life cycle, participants. You can just make note of these different stages, and then we'll have a look at product cycle. Is it done, everybody? Have you noted down all this? Ashweta, regarding the slides materials, you'll have to contact your BA instructor. Okay, please contact your BA instructor to get the slides. Okay, participants, we have the next one, that is the industry life cycle, or you can even say the product life cycle. Both are almost the same thing. So here also, participants, you find the similar thing. Okay, the industry life cycle means you're trying to bring up a new product into the existence into the market. All right. So here you can see, participants. First of all, we do the product development. It includes the market analysis, the product design, invention, and then the testing. And then we are introducing the new product into the market by doing the marketing and giving lot of advertisement. And then there is a rapid growth, means we are selling lot of products if the product is really a hit. And then the maturity phase, where the sales growth rate approach the average rate of the economy, and then finally there is a decline. Okay, so do you see, participants, these are the different stages of the products. All right. So let me give you the example again, participants. This is a timeline over here. So first of all, what we do is we check into the market and what is the need of the new product we will find out. Okay, so whenever we want to launch a new product, we try to find out, okay, if there is any requirement of a new product or not, we try to check it. Fine. Now, for example, you can consider the computers. The old version of the computers, do you remember? We had the computers, and yeah, even now we use the computers, all right. So that was a new product that was coming, that had come into the market. So initially we try to do the market analysis and we check what is the demand. So each and every house, everybody needed a computer. So then the product development started, and then the computers came into the market. Everybody started purchasing it, and then slowly the sales will reach at the peak. Okay, and then participants, there is a rapid growth over here. Everybody wants to buy the computer, maybe for their kids or maybe for their office work. Everybody wants to buy the computer, so it is at a peak, and then slowly your sales will start coming down, and then they will get stabilized, because participants, now you can see most of the things are happening on the mobile applications itself. Okay, so there are so many softwares that are getting converted into the mobile apps. Now the mobile apps have got very popular. You cannot carry your computer or a laptop everywhere. Before, laptops were being carried, and then there was a high demand for the laptop till the iPads and till the smartphones came into. Now you can see that the computer is again, it is limited to your house, or let's say if you have very important office work, like let's say presentations and all, only then you carry your laptop, otherwise you don't. Okay, otherwise you don't carry the laptop everywhere, correct? But then what about your phones? Since the phones have got introduced, I mean the smartphones and then the iPads, they have become more handy to carry them outside, so people have started carrying them instead of the computers now, correct? Or the laptops basically. So what has happened now, it has almost come to the stable, or there are some regular sales that are happening due to the introduction of the smartphones and then the iPads. So what the company does now, they are manufacturing the computers. Now let's say for example Apple company, they are manufacturing the computers, no doubt there are sales happening, but then again they have reached a stable state. Now there is more demand for the iPads, the tablets basically, and then also the smartphone. So people have started purchasing the iPhone because you can browse your internet. Most of the things that you can do on your computer, like the apps and all the softwares that are getting generated, the apps are getting generated which can be installed on the mobile phone, and they can be used easily by everybody. Okay, so what the Apple company did, apart from manufacturing the computers, they have identified there is a new requirement for the technology over here, like we have the iPads and then the iPhones. So they have come up with the new devices again in future. We don't know when the iPhones and then these iPads also get stabilized, they might come up again with a new device. So here you can see, participants, initially we try to analyze the market. We try to find out if there is a requirement of new product into the market, and then based on that we develop the product, and then we try to introduce it into the market. We try to get the new customers and then introduce it into the market. if the people are liking your product, then the number of sales go on increasing, and then there is a rapid growth in the rapid growth in your sales. And then it reaches the maturity phase. Maturity phase means it is stable. Okay, number of sales is neither increasing nor it is decreasing. The sales have become stable. Initially in the market introduction phase, everybody want to, sorry, rapid growth, everybody want to purchase the computer because it was completely new. Okay, everybody want to have it. So once it is already purchased, everybody have the computers now. Only there are some new customers that are getting added every day, and that is going to be a stable sales that is going to happen, means we have reached the maturity stage. See, the moment we start reaching the maturity stage, participants, again we have to start exploring the market. We have to try to find out what is a new product requirement into the market, and then we have to make the new inventions, we have to make the investment again, and then we should develop the new product. Otherwise what happens, you become extinct. Okay, no more products will be, I mean, you'll have the stable sales sometime and slowly it starts declining, and then finally your company will close down. But if you want to continue to be in the business, once you reach the maturity phase, you start exploring for the new things that you can introduce, and then you should be up with the business always. Like it happened in the business life cycle also, once the business reaches certain stage, you should start exploring the new investment, and you should start making the branches. Let's say you should start having the expansion plan. You have to start something new, otherwise slowly you decline, and then finally your company will, or your business will close down. So here also the product has already reached its maturity stage. People have started purchasing the smartphones more than the computers or the laptops because they already have them, and that is how slowly there will be a decline. So that is the last one, because there are newer inventions that are coming up. Okay, so now people, most of them, okay, instead of purchasing the huge laptops, they are trying to purchase the simple iPads and then the smartphones, which are more handy for them. Okay, for example, you can take the students itself. Let's say the high school students or the college students. Laptops again they could be using, or the computers could be used in the college, but then tablet is more easy for them to carry and then to read the notes, so they try to take that. Otherwise you can consider the phones. It is more easier for a person to browse and access the internet. People go for it instead of purchasing a huge computer if it is not the requirement. Okay, so people, you should start making the new inventions when you reach the maturity phase of the product. So these are the different stages that we have, and we call it as a industry life cycle. So you can make note of this one, participants, the industry life cycle. The financial statements are created, all right, on certain standards, all right. There are certain standards based on which we are creating the financial statements, which is generated by FASB, and then it is called as the GAAP. Alright, so they have the different formats of the documents in which the financial statements have to be presented. We call them as the SEC filings here. Okay, so we have the financial statements which come in the different formats like SEC filings, like we have the 10K, 10Q, 8K, 8KA, S1, S4, and so on. Alright, so we have the audited financial statements from the independent auditor, and then we have the different models over here, for example from the company, the research reports, and so on. And then whatever statements that are getting generated, they have to get audited over here. So the public financial statements are available for all the companies. So there is US Security Exchange Commission, that is sec.gov. So you can check on this website and then you get all the information regarding how to generate the different kind of financial statements and then the different formats. So the SEC filings, basically, see, you're filing your tax, right? You have to file the tax if you have the business. And while you're filing the tax, you'll have to generate the different kind of financial statements, which will be in a particular format, which have to be submitted to the government. All right, the tax returns have to be filed. So here we have to file it in the format that is called as the SEC filing. So they are the most reliable source of the data, and even they are very reliable data. Now, if you want to analyze the financial condition of the organization, you can refer to the SEC filings of that organization. Okay. Now, let's say you want to do some kind of investment in the company, you want to purchase some shares from that company. All right. So in that case, you'll have to first of all go through the SEC filings, or they are basically the financial statements. SEC means they are the standard format of the financial statements itself. So you can go through these SEC filings and then you can find out what is the financial status of the organization before you do the investment. Now there are certain types of SEC filing. For example, there is S1. S1 means it is a basic registration form used for the offering of the public securities. So whenever the person has to use the public securities, so this is a application form that has to be, or registration form that has to be considered. Then do you see we have S2, simplified version of S1. S4 is there, the registration of the public securities. 10K I mentioned to you, do you remember in the previous class? So it is an audited annual report. Every year the complete consolidated financial status of the organization has to be generated, which has to be audited by some accounting firm, and then it has to be filed to the SEC, and that is called as a 10K format. And then we have the 10Q format over here, which is actually a quarterly report. This can be submitted without any kind of auditing. So like this, participants, there are different formats that are available, and these are a couple of examples that I'm showing over here. So we call them as the SEC filings. Now we'll take an example. Out of all this, the 10K structure is most important for any organization, all right, because it is an annual report. Annual report means it has lot of information about the organization, what it has done for the entire year, and this is filed once a year. Okay, so do you see 10K is filed once in a year? We call it as an annual report, and it has to be audited by the accounting firm. Okay, so closing of a fiscal year period. See, in some countries the years will be closing in the March, and some of them like April, some of them close in the December. It depends. Okay, it depends on the company when they are trying to close it. Okay, so after the fiscal year is closed, within 90 days this 10K has to be filed. And then there are four different sections that the 10K should have. Means I said you right, there is a particular format that we got to follow. So there are four sections over here: the general business overview, and then we have the MD&A financial statements and notes, the directors officers compensation, and then the list of exhibits. So these are the four sections that we have in this 10K. The first section, participants, wherein we have the general business overview. Again, do you see there is a format for every section? There is a format. We just have to fill out the details as an organization. For example, your business description, what is the industry trend, what is the competition that is existing in your business, what are the properties that you have, who are your suppliers, who are your customers, what is the sales and marketing that you're doing, how you're doing it, what are the regulations that you're following, what is the risk in your company, and then the legal details of your company. So all this information has to be entered, and this comes under the general business overview. Okay, so for example, participants, let's say suppliers, in the sense you require a raw material. Let's say you're purchasing some product. Okay, whenever you're purchasing some product, sorry, manufacturing some product, there are certain raw materials that are going into it. For example, you can consider the McDonald's is a business. So when they want to manufacture the product, like the McDonald's burgers and then the fries and all that, they require certain raw materials, like they require the flour, they require the vegetables, they require the meat, and then they require the oils. All right, so all those come under the raw materials, and they have to purchase it from somebody. Correct, they want the vegetables, they have to purchase it. They want the oil, they have to purchase it. The flour, they have to purchase it. The meat has to be purchased. All right, so they have to purchase all these raw materials using which they are making their products. All right, so from whom you are purchasing, they become the suppliers. Now who could be the competition for them? So we have the big burger and all that, so they become the competitors. All the other manufacturers of the burgers become the competitors for these McDonald's, right? And then they will own certain properties in the sense, in the different cities, in the different location, they have the um, outlets wherein they are manufacturing the product. That is basically they are making the burgers and then they are selling it. Okay, so that becomes the properties. And then who are the customers? Customers, basically the fast food lovers are the customers for the McDonald's. All right, people who like the fast food, and then people who are interested in some quick meals, they are interested in this kind of product, so they become the customers. So what is the sales and marketing that is happening? So every day, or let's say every month, what is the total sales and marketing that is happening? What are the regulations that they have to follow? For example, the cleanliness, they have to purchase the raw materials that are meeting the standards. Correct, they cannot use a meat that is has been stinking, or which is already like 2 days or 3 days old. They want the fresh meat to be put in, they want the fresh vegetables to go in. All right, so there is a quality of the raw materials that they are supposed to use as per the standards. So there is a quality check whenever they are receiving the raw materials and then they are making the burgers. Correct, so we have certain regulations to be followed. Then there is a risk. There is certain amount of risk that is involved. Maybe sometimes the raw materials we are not getting on time, because it depends on the season. Sometimes the raw materials that are used for the cooking are actually seasonal, so in that case we might have to go for some kind of storage, right? So there are certain risks that are involved. Or let's say the prices of these grocery items that we are using in the manufacturing, they are increasing and decreasing. But then at the same time we want to make sure that the burger is manufactured at the same price, so we have to consider all those things. Every day you don't find a different price. Okay, for the vegetables, you see, every week or every day there is a different price, but the same thing doesn't happen with the burger. There should be a standard price with which we are selling the product. Correct, so here also, no matter what um, the raw materials that we are purchasing, it may be sometimes less, sometimes more, there could be difference, but then we are supposed to sell the product at some standard price. If the price increase once, we cannot come back to the previous price unless there is some kind of discount that we announce. Okay, so there is certain kind of risk. We don't receive the raw materials properly, or let's say we don't receive them on time, the price of the raw materials is going up and down. So there are certain risk in every business, which you could see here also. And then certain legal things, whenever the product is manufactured, again it has to meet certain standards. It should not be overbaked, you should not sell the stale products. All right, so there are certain standards again that you have to follow, which are actually legal. Arunita, you need not remember anything over here as such, but just be aware that this is how the business is going to run. Just remember that the SEC filings, that is annual report, it is of 10K format. As much as possible, try to remember, because I understand this is a domain and each and everything might not be applicable in a particular project. Okay, based on the project you can again go through the domain in detail, but as of now just remember some basic concepts, okay, as much as you can remember. Then we have the management discussion and the analysis over here. All right, so there is a discussion of the revenues and then the cost and then the liquidity of the company, means how much of cash is the liquidity, means it is basically the cash, what are the assets. Then we have the financial statement. So we discussed regarding the three different financial statements, right? So all those financial statements should be present in this report. Okay, or all the three financial statements have to be present. The income statement we discussed, balance sheet we discussed, and then we have discussed the cash flow statement. So all these three statements, it is must and should that it should be present in the annual report. Okay. Then the list of exhibit. List of exhibit means any new decisions that you're making. For example, the bank and credit agreement, the debt indentures, merger agreements, shareholders agreements. Okay, so whatever decisions that you're making or any kind of mergers that you have, expansion plans that you have to mention it. Okay, the different agreements and then the documents, basically list of exhibit means it is a different list of agreements and then the exhibits that you have to write. Okay, and then we have the financial statements that we already discussed, and then how to go through and understand the financial statement also I showed you, like what is the balance sheet, what it contains, how we should be able to balance it, what is the cash flow statement, what is the income flow statement. All right, so all that we have already discussed. Now there is something called as a ratio analysis participants, using which you can try to understand the current status of the organization. So here you can see there is something called as ratio analysis, the financial ratio analysis. For example, there is liquidity, leverage. Leverage means what is a leverage that you can make the new investment or you can make some purchase. What is the current activity that is happening, the operation that are happening, what is the profitability, what is the growth rate. So for that we have certain kind of ratios over here. Ratios means the numerator divided by the denominator. You have certain kind of ratios that are available which will help you to analyze the current status of the organization. For example, I showed you the NPV and IRR. So the NPV should always be positive, then only you can invest in that kind of projects. The IRR, if it is higher one, you have to choose that project. Let's say there are 10 projects and you have the different IRR that you calculate, whichever has the highest one, you got to choose that. Correct? So here also participants, there are certain ratios that are available over here. For example, do you see liquidity, current ratio, quick ratio? We are dividing certain things, and then based on that we try to find out what is the current financial status. Again, you need not remember all these equations and then formulas. Just be aware that how the financial condition of the organization can be analyzed. It is based on the financial statements, and then based on this kind of ratios or certain terminologies that you can find, using which you can find the financial condition. Now, participants, to summarize, like what exactly we learned in this finance topic. Okay, it is all about the business, how the business runs. Okay, so the business basically, it is, if we want to analyze the business, you should be able to analyze the current status of the financial status of the organization, which comes in the three formats. That is the three financial statements. You can use that and analyze the current financial status. And then we also learned that there are certain standard formats that are to be followed, with which we are going to analyze the financial condition, and every organization has to follow the standard in order to prepare their financial statements. And then in the corporate finance we try to discuss like regarding the investment. Okay, the capital budgeting was a main thing that we discussed. What is the value of money, how the value of money can be increased, decreased, what are the equations that are used, all that I showed you. How you have to choose whether you have to make the investment or not, and then when you should start making the new investment. Basically when there is slow decline and the recession starts, you start making the new investments, right? So that is what we discussed in the corporate finance. Basically it is an investment decision or the capital budgeting that we are going to do. Then the final one, that is analysis. So we have to file the financial status of the organization in the form of the different kind of statements, all right, which could be used to again analyze the financial conditions of the organization, and that is how the investors are going to invest in the organization. Okay, so this is what we have discussed under this finance topic. So this completes your topic for participants, the finance topic. All right. So here we are going to close on this finance domain. Now, if you have any kind of questions in the future, you can reach us and we would be assisting you And when it comes to the this one participants, whenever your interview, again, as of now you need not go into too much of detail when it comes to the domain. For example, we had the health insurance domain, we had the finance domain. So at this point of time, you need not go into too much of depth and read each and everything, read each and every act, and then try to analyze each and every financial statement. Practically, that is not possible. Okay. So as of now, whatever basic concepts that we have learned in the class, try to read them twice or thrice and remember whatever is possible. But when you go to the interview, let's say you receive an interview call. At that time, find out, okay, what is the project all about, what is the company all about, okay, for which you are applying the jobs. So find out all that participants, and then based on that you can make the in-depth learning and then the project based learning and prepare for your interviews. Okay, so that is what you got to do. Clear, everyone? Tejaswini, regarding that, you'll have to contact your BA instructor. Okay, contact the BA instructor, he will assist you. Okay, then participants, it was nice interacting with all of you on these two topics. And then I hope it has been very interesting and then useful for you for your career anyways. Okay. Any assistance you need, you can get back to us. Thanks everybody and good night.